This is Realty Income, and this is the monthly chart. And despite the collapse from the beginning of the year to now, which is very different from the rise in price on the S&P 500, Jim Cramer thinks it's still a buy. Before we look at the charts, let's look at this article. It is coming from Finbold. Jim Cramer still thinks Realty Income stock is a buy. Here's how much it's down in 2023. Now, good, bad, or indifferent, at a minimum, Jim is very entertaining. And unfortunately, he's gained the reputation of whatever he says, you do the opposite. So that's why we're looking at Realty Income. Do you still short it? So Jim Cramer recognized Wiley for his dynamic presence and bold takes on stocks and cryptocurrencies, brings a blend of entertainment and insight to the financial world. Beyond his role steering the high-energy show Mad Money on CNBC, he has worn many hats, from orchestrating market strategies as a former hedge fund manager to penning his thoughts as an author. So he took to Twitter, aka X, earlier this month, and he said, this Evan dude, Jim Cramer was asked about Realty Income, and Jim said, I still think it's a buy. So in what seems to become a popular inverse trend, Cramer's optimistic comments have sparked an avalanche of bearish comments against Realty. You have a couple of folks saying the following: time to close my position. Why this one, Jim? Similarly, another user commented, that means another 50% drop, maybe more. DCA in from below 25. At the time of press, Realty stock is being traded at around $50 with a positive change of 4% in the past 24 hours, and has been priced as low as $48, $48.75 same period. Moreover, Realty Income stock value experienced a negative yearly change of 22%. Again, this article came out on November 3rd. But this time, Cramer might be right. With a portfolio of over 13,000 commercial properties and a market cap of $34 billion, this REIT is expanding rapidly. Furthermore, it generates reliable cash dividend and has earned the name the monthly dividend company. All right. So going back to the charts. And we're going to start with the monthly chart. This low at 37.50 was the pandemic lows. The most recent tops was when Fed Powell stopped throwing out and down helicopter money. And we see the most recent support level at $55 get breached and closed. Candle closed below it back in September. All right, so if price came all the way down to 37.50, there are buyers, we'll say, at $40. So from a macro picture, the chart suggests that it's not time to buy. Now, you did get a pullback, or you do have short-term support at $45. So let's take that down to the weekly chart. Yeah, this implies sellers came in and look at that volume. So you had buyers that thought that price was at a selling at a discount at $45, or they were taking Jim's suggestion and started buying the stock. This is the 13 and the 26-week moving averages. They're still pointing down. To me, this tells me that there's still downside risk. Let's take it down to the daily chart. So this gap down and sharp, we'll call it V reversal, tells me that prices were oversold. And what you can see is that your moving averages are starting to converge. They're starting to come together, which means that the downside momentum has decreased and or has been eliminated. Now typically price doesn't reverse this sharply. You could get a retest in which price then would form a double bottom. But for me, I think the upside is limited because of this. What was support on the monthly chart is now resistance. We'll say at the $55 level. Now I do want to go down and to the left. Again, that was $45. And just see price action below $45. So if price hit a recent low of $45, which is here, I don't see any candles with significant volume. Even the pandemic lows, I don't see any spikes in volume. So I like the comment dollar cost average. They do pay a monthly dividend. And if I scroll out to the monthly chart, and if I just mark, say, the low at 40 and the high at, say, 80, and I mark a middle at 60, price is selling at below fair value if 60 is the middle of the range. So depending on your investment strategy, depending on whether you are trading, looking for wealth, just residual income, again, prices below the fair value level. So you could dollar cost average. You could wait to see if price heads lower. But if you wait, potentially you might miss the move higher. So it comes down to your risk tolerance, your financial objectives, and your time horizon. But I'm going to have to say, potentially, I partially agree with Jim Cramer. Again, based on the most recent multi-year lows and highs. Thanks for watching. Subscribe. Please like the video.